as a money advisor and operations supervisor in student support services. I'm just going to give you a brief introduction today to student finance and the way in which it is repaid. So without further ado, funding available to students. The third one is regarding independent students. The fourth one is further support that might be available in the form of grants. The next is applying for student finance, and then we're going to cover repayments and other support that might be available, such as bursaries, scholarships and hardship funds. So firstly, eligibility. There's various eligibility types, so it depends on the course, the individual and any previous study that they may have had. So the course, in order to receive support from the student loan company, must be designated and be a first degree course, such as a BSc, a BA, a Bachelor's of Education, foundation degree, higher national diploma, PGCE with QTS recommendation or integrated masters. And it must be a UK publicly funded institution or a publicly funded course at a private institution. Personal eligibility. So personal eligibility varies depending on the type of support a student is applying for, so whether it's a tuition fee or maintenance loan. So in order to be eligible to apply for block support, which is the full package maintenance loan and tuition fee loan, students need to be a UK national or have settled status. They must have been in the UK for 3 years prior to the first day of the first academic year of their course, and they must have no restrictions on how long they can be in the UK. So that is when they have citizenship, indefinite leave to remain, right to reside, or another immigration right dictated by the Home Office that enables them to stay. EU nationals must be resident in the EU on the first day of the academic year in which they're applying for support, and they are only eligible for tuition fee support. Certain students may be classed as an EEA or Swiss migrant worker. That's particularly relevant to those that are mature students, but also those that are children of migrant workers. Their status is derived from their parents, and so if they came over here in support of their parents' pursuit of employment, then they could be classed as a migrant worker or child of, and therefore eligible to student support as if they were a home student. And also refugees or those under humanitarian protection. So as long as they maintain their refugee status, then they are eligible to be classed as a home student when assessing them for student finance. And this right also extends to any dependents, so whether that's a spouse or child under the age of 18. And they must also be resident in the UK on the first day of the academic year. Generally, students are only entitled to student support for their first higher education course. So if they have studied previously, then they will have their assessment calculated based on the calculation on screen. So that is the original duration of the course that they're going to study. So a standard bachelor's is 3 years plus 1 year, which means they've got 4 years of funding, and then minus PRC, which is the years on the previous course. Students also aren't eligible for funding to study a qualification that is the same or a lower level as one that they'd already hold. So if they've currently got a bachelor's degree, they won't be able to receive funding for a bachelor's degree or any course below that level. These rules usually only apply for tuition fee and maintenance loans, but students should still be able to access the supplementary grants, which we're going to come on to later. There is an exception to the rule in that students that are studying part-time STEM courses, as designated by the Department for Education, may be eligible for support even though they currently hold a previous qualification. I'll just put a little example on screen. I'm sorry, but the formatting's going to be a bit funny. So Jane wishes to study a 3-year photography course, but completed 2 years of a fine art course ending in 1998. She did not receive a qualification. So as per above, she's got 3 years, which is the length of a new course, plus 1 year, which is her gift year. So if she needs to repeat, take a break from her studies for any reason, that is there as a backstop. So she has 4 years entitlement, and then minus the 2 years that she is eligible for, that she received funding for a previous course. So student finance allocates the remaining entitlement to years closest to graduation, which means that she would have to fund the first year of her new degree. So we're just going to touch on what support is available. This is largely based on Student Finance England, though there is some discussion around Wales, Northern Ireland and the Students' Awards Agency Scotland. And there is also separate funding arrangements for NHS students, which unfortunately I've not included in this presentation. I must admit it's not my area of specialism. So tuition fee support. This is all eligible students, including EU nationals, are eligible for tuition fee support of a loan of up to £9,250. It's non-means tested, which means it's not based on household income, and it's paid to the institution in 3 instalments throughout the academic year. So 25% in September, 25% in January, and the remaining 50% in May. That's on the basis that if a student wishes to take a break from their studies at any point in the year, say they commenced the course and decided they didn't want to continue, they wouldn't be liable for the full year's fees. For tuition fee support, there is no upper age limits, and the amount of tuition fee support does vary across nations. And I've concluded a little table just afterwards for us to go through. So there are complications in the students who they apply to the award agency that they are residing in, but they might be studying elsewhere. So someone that is usually ordinary resident in England but is studying in Wales would still apply to Student Finance England. Largely across the board, tuition fees are £9,250, though it does vary by institution. And for those studying in Wales, the maximum fees are £9,000. And for students that are ordinary resident in Scotland, studying in Scotland, they don't have any tuition fees. The second grants or loans that students are available to are maintenance loans. So these are available to all eligible students, and they can be calculated using the link on screen. There's a student finance calculator. It is composed of a means tested and non-means tested element. So one part is based on parents' or partner's income and one part isn't. It's done using a household income assessment. So when determining who is in the household, it includes parents or partners. And if the parent is living with them, with someone as if they were their spouse, then they would be included as well. So say there was a single parent who was a mum and they were living with their boyfriend permanently, both the mum and the boyfriend's income would be included in the household income assessment. All students will receive an element of non-means tested loan, which is a basic amount to enable all students can access their studies. And household income will be included for all students that are under the age of 25. Even if they've got a partner and say live away from home, they would still be eligible to be assessed on the parent's income, unless they meet the exceptions, which we're going to come on to in a moment. Students are also likely to be in receipt of a higher amount if they claim welfare benefits. So these are usually mature students or independent students, and those that have disabilities. There are also different rates of maintenance loan dependent on where the student lives, where they'll be studying, whether they're in their final year or not, because they receive slightly less as they're not paid for the summer vacation, whether they're in receipt of welfare benefits, as we just said, and whether they're on a long course or whether they're going on a placement abroad. So just a little bit more about maintenance loans. They're not available to EU students as a general rule. However, if EU students have been resident in the UK for more than 5 years before the first day of the first year of the course, then they may be eligible for a maintenance loan. When we're talking about the first day of the first academic year, that counts as the 1st of September. Even though they might not start their course until October, for student finance purposes, that is the first day of the academic year. The maintenance loan is paid termly, so similar to tuition fee loan, but it's paid directly to the students into their bank account. And as I mentioned, some students may be eligible to a higher rate of maintenance loan called a special support element, which isn't included in assessments for benefits. So they are students that are lone parents with a child under 20, students that are deaf and qualify for disabled students allowance, which we're going to come on to in a moment, students that are in receipt of disability benefits, so personal independence payment, disability living allowance or armed forces independence payments, and also those that are in the receipt of the housing element of universal credit. So this is the brief table confirming the amounts or maximum amounts that students are entitled to. So if they're studying elsewhere but in London, so away from the parental home, elsewhere but outside of London, so still away from the parental home, and home. So if they were living at home with their parents or whoever the person supporting their application might be. There are some quite substantial changes in the Welsh system this year, in that all students are eligible for the same amounts of funding, but the means tested element, which we talked about earlier on, is that determines how much of the money they receive is based on a grant and based on a loan. The minimum maintenance loan for those in England, so for those that have got a household income above approximately £62,000, is £5,654 for London, £4,054 for those studying outside of London but away from home, and £3,224 for those studying and living at home. So just confirming what we said about Wales there. So there are no grants available for living costs for English students, so those that are funded by Student Finance England, and students that are funded through Student Finance Wales receive a non-means tested grant of £1,000, and thereafter it's means tested. Independent students. So when is a student independent? So a student is independent when they are 25 or over on the first day of the academic year, so the 1st of September. So after this point, their income or the household income assessment will be based on their partner if they have one, and if not, there'll be no income to be included. If they have no living parents, so if both parents are deceased, it might be that they're subject to a special guardianship order, or they've been in local authority care. That might be evidence that can prove their status. The parents cannot be found, or it's unreasonable to contact them. So this is usually only in circumstances where the Home Office is deemed it would be unsafe for those parents to be contacted. So that might be areas where there's a no-fly zone, or there's no contact or no transport is recommended. Students that are estranged from their parents, so the student finance regulations state that they should have no physical, verbal or written contact with the parents for a minimum of 12 months before they're applying for this status. However, they've recently changed the regulations to include unless otherwise considered by the Secretary of State. So if it is obvious that there's been a relationship breakdown, students can apply as independent students. Care of a child, so children that have got students that have got children will be classed as an independent, but they must have care of the child on the first day of the first academic year. So like we said earlier on, that is when the status must be concluded by. If they have a child in year, then they will be independent from the next academic year. However, they will be eligible to be assessed for grants for dependents, which we'll come on to in a moment, based on their parent or partner's income. Those that are married and have a civil partner, so those individuals will be have their household income assessment based on their partner, as obviously marriage is a legally binding process. Those that are care leavers, so a care leaver is defined as someone under the Children Leaving Care Act 2000, so as someone who has been in the care of a local authority or given accommodation by the local authority for a minimum of 13 weeks before the age of 16. They also must not have reconciled the relationship with their parent. Students can also claim as an independent student if they have supported themselves financially for a period of 1,095 days, so 3 years, prior to the first day of the first academic year of their course. This doesn't necessarily have to be consecutive, and it may be that the student still lives with their parents but supports themselves financially. We're just going to come on to further support. So I've been talking about supplementary grants as we've gone through, so we're just going to touch on those briefly. The first of which is Parents' Learning Allowance. So this is paid for students that have care of a child. So it's paid directly to the student, the same as the maintenance loan and grants. The amounts vary dependent on the different nations, so England, Wales, Northern Ireland and Scotland. It's means tested, so based on partner's income, if they have a partner. If not, they won't have an income included. And as I mentioned earlier on, there are some circumstances where it might be based on the parent's income. A child must be financially dependent on the student, so Student Finance England will undertake a dependency test in which they will determine whether, usually in cases where there's a partner, whether the child is directly dependent on the student or the other partner in the relationship. And this isn't included when determining the eligibility for benefit, so it's not included in calculations. And this just gives a brief overview of the amounts that are available for students studying in the different regions. So £1,669 for England, £1,557 for Wales, £1,538 for Northern Ireland, and £1,305 for Scotland. There's also the Childcare Grant, which is available in England, Wales and Northern Ireland. In Scotland, students apply directly to their institution for support with childcare costs. The Childcare Grant can contribute up to 85% of childcare costs as long as the child is in Ofsted registered childcare. It's paid directly to the student at the same time as the maintenance loans grant. Students must submit an estimation of what their childcare costs might be through a CCG1 form. At the end of the term, their childcare costs are then rectified and confirmed by the provider on a CCG2 form, which is submitted to Student Finance, where any adjustments are then made. Again, the amounts do vary dependent on the nation, and it's means tested, so again based on the partner's income in that situation. And again, the child must also be financially dependent on the students. This is just a brief summary of the amounts that are available to students per child. So there's an amount for one child, an amount for two child, and any above that. So if a student has 3 or 4 children, they'll still only be able to claim the amounts in the right hand column. Usually the Childcare Grant is only payable for 39 weeks of the year, so during the academic year. However, in exceptional circumstances, where requests can be made to Student Finance for it to be payable over the full 52 weeks. The Adult Dependence Grant, so this is paid directly to the student at the same time as the maintenance loan. Again, it varies on nation and is means tested. The adult must be financially dependent on the student, so that is classed as an adult that has an income of less than £3,796 per year, so that's taxable income. So if they're in receipt of, say, disability benefits, they won't be included in that assessment. And also, they're not eligible for the Adult Dependence Grant if the individual is their child or if the other individual is a student. And again, these are the amounts that are available to students in the different regions. So £2,925 for England, £2,732 for Wales, £2,969 for Northern Ireland, and £2,640 for Scotland. The next of the supplementary grants is Disabled Students Allowance. So the Disabled Students Allowance can help with extra costs incurred because of long-term illness, mental health problem or other disability. It's funded through Student Finance and is non-repayable. So students will be eligible for a number of different assistive technologies. So that could be specialist equipment, non-medical helper support, such as academic support workers that can help them structure their essays, etc. Note takers, if they struggle to take note in lectures, and also to help with exam concessions. There's also extra travel costs because of a disability, so that might be if someone has extreme social anxiety and they may be given a taxi allowance, and similarly with those that have got mobility issues, they can also be eligible for this part of DSA. There's also other disability related study costs. So it might be that there is software for their computer, such as Dragon Dictation, that can help students with specific learning differences. Students will need to pay a £200 excess to access their equipment, but this is the only cost incurred from accessing Disabled Students Allowance. Part-time student support, so this is usually or mostly applicable to mature students who have got other commitments, both financially and with their time. From the 1st of August 2018, part-time students can apply for a tuition fee loan and maintenance loan to cover the living costs. The course must be a level 6 course or above, so it must be a full bachelor's degree. It can't be like we discussed earlier, where you can have for a HNC or HND for this year at least anyway. If there is a full-time course equivalent, then the part-time version must be at least 25%. So generally there's 120 credits in the academic year, so they must be studying at least 30 in order to be eligible for the maintenance loan. The maintenance loan is prorated based on the number of credits being undertaken. I'm sorry, it's cut off the screen there. In comparison with a full-time course, so the maximum loan available to a full-time student is £8,700. Again, that's 120 credits per year. If a student is studying 60 credits, they'll be entitled to half of that amount, so £4,350 per year. Unfortunately, there isn't a great deal of information that's been released by Student Finance as they're still dictating policy. I believe it's secondary issues with the Department for Work and Pensions, as previously these students haven't been eligible for maintenance loans but are eligible for benefits. The applications are due to open at the end of May, so that's important for those students that are looking to access the part-time loan scheme. And these students, although they're eligible for a maintenance loan, aren't eligible for the dependent grants that we talked about earlier, but are eligible for DSA. So applying for student finance, the application process. So where to apply? So there are a number of different awards agencies that students can apply to. The first is Student Finance England, second Student Finance Wales, third Student Finance Northern Ireland, fourth Students Awards Agency Scotland, and lastly Student Finance Services EU team. So that's for those students that are applying as EU students. If students are applying as a migrant worker, then they would apply as a home student to their relevant award agency, so that is where they are usually or ordinarily resident. The students must apply 9 months after the first day of the academic year. So as we said, the 1st of September is usually the first day of the academic year, and therefore the deadline is the 1st of June. So for students that started in September of 2017, they must have applied by the 1st of June 2018. For students applying to the Students Awards Agency Scotland, the deadline is slightly different, in which they must have applied by the 31st of March. Student finance applications are recommended to be submitted by the 25th of May for this year, in order to ensure support is agreed for the start of the course. So that's not a deadline that means they're not eligible, as we just discussed, but that's generally the deadline which they give to enable turnaround of all the appropriate assessments and the support to be available when they start their courses in September. So there are multiple ways to apply. The first one is online, and the second one is via paper. So in order to apply online, students need to set up an online account, and they can do this using their email address. To apply, applicants will need their passport number, national insurance number, history of their residence, previous study details, so if they studied a previous course details, but they don't have to have a confirmed place, so usually students apply to wherever their firm institution is, and also their bank details, so they can obtain information as to where the maintenance loan should be paid. In order for students to be eligible to receive their funding, they need to sign a declaration form agreeing to the terms and conditions of the student loan company. Their funding won't be released without this, but you'll be glad to know that as of the 25th of March, so Sunday, Student Finance have launched an e-signature, which means that they can do it online rather than having to send a paper-based form, which often gets lost in the post. In saying that, students can apply by paper, so if they struggle with online forms or they find it just easier, then they can do so. So they will need to complete a form relevant to their circumstances. So for new students studying in England, that was a PN1 form. They also need to complete a separate form for the household income assessment to be undertaken, which is called a PFF2. The Childcare Grant estimations form that we spoke about earlier is a CCG1 form. A current tax year income assessment. So this is where student finance is based on the prior tax year. So for students starting in September 2018, their household income will be based on that from the 2016-17 tax year. If there's been a change in circumstance in the household situation since that point, then they can apply for a current year income assessment in order for their maintenance loan to be based on their income for the current tax year. And disabled students allowance. So students can apply via a DSA1 or a DSA Slim form. So if they've already created an online account and they've been given a customer reference number, they can complete the DSA Slim. If they're making their application from scratch via paper, then it will be the DSA1 form. And the DSA Slim is, as it says, much shorter than the DSA1. Repayments. So repayments vary on region, dependent on whether it's Student Finance England, Wales, Northern Ireland or Scotland. So interest is charged on the loan that a student takes at a maximum rate of inflation plus 3%. So while students are studying, when the first payment is made, they are charged inflation plus 3%. They're also then charged RPI at a rate of 3% once their earnings exceed £41,000, and between £21,000 and £41,000 is RPI plus 3% on a sliding scale. Repayments are automatically deducted from gross pay, so much like tax, national insurance and pension. Repayments begin once earning above £21,000 at a rate of 9%, and the outstanding loan balance is cancelled after 30 years or if the individual is disabled and deemed permanently unfit to work. You'll note the asterisk above £21,000, so the repayment threshold is due to be increased to £25,000 as of the 6th of April. This is as per the Parliamentary Statement HCWS 145. However, this is still subject to approval, so at the moment we're still informing students that it's £21,000. So I've just done a brief diagram of what the difference might be between the two thresholds. So for an individual that is earning £25,000 at the £21,000 threshold, their annual payment will be £360 or £30 a year. Obviously, someone that's earning £25,000 at the 9% threshold, for the £25,000 limits, will pay back nothing, both annually and monthly. For those students that are from Student Finance Northern Ireland and the Students Awards Agency Scotland, repayments are automatically deducted from their gross pay, much like before. Repayments begin once they're earning above £17,775 at a rate of 9%. Though this is again due to rise once it's been confirmed in Parliament. Interest is based just on RPI, and that's the outstanding loan balance is cancelled after 35 years in Scotland if they're permanently disabled or unfit for work, and 25 years if they're funded through Student Finance Northern Ireland. And like I said, the repayment threshold for this year is due to rise to £18,330. This amount is reviewed annually and is always subject to change. So other support. So on top of statutory support through the Student Loans Company and Student Finance Systems, students can also be eligible to support from other areas, such as the university. So most universities offer bursaries to students from low income or participation backgrounds. They do vary largely between institutions. So here at Bursary University, we have a £3,500 bursary over 3 years. UE, the University of West of England, Bristol, have a £2,000 bursary, and Oxford pay a bursary of £3,700 per annum, so it really does vary across the sector. Bursaries are non-repayable grants, and they're sometimes paid in kind, so they may be used as a fee waiver to offset the amount of tuition fees that the student owes, or also be paid towards accommodation to reduce the burden from that perspective. There's often extra support available for independent students, such as care leavers or those from estranged from their parents, on top of other support such as a local authority higher education bursary that is awarded for care leavers. As an example, here at Bursary, we award £1,000 per year of study to those students that are independent. Scholarships. So scholarships are usually based on academic performance or extracurricular performance, and they do vary between institutions. They also vary in the number that are available and the size of the award that is to be given. They may be awarded by the institution, but also other partners, such as the Royal Geographical Society for Physics or Chemistry, depending if it's relevant, and also alumni. So often they will support students through various scholarships. Some universities may partake in the Unite Foundation Scholarship, which is a scheme for care experienced or estranged students, in which their accommodation is paid for the duration of their studies, so they're able to stay in Unite's halls accommodation. And this does vary between institutions, as not all sign up to this scheme. Hardship funds. So most universities will operate some form of hardship funding for when students find themselves in financial difficulty. The criteria varies depending on the institution to best fit their student demographic. So for those students that have got more individuals from lower income or participation backgrounds, they're more likely to have much larger funds in order to accommodate for this. Students can apply to these funds when statutory support and others funding such as part-time work is not sufficient to support themselves. But these funds are finite, so students should apply as soon as they find themselves in difficulty. Most will consider exceptional essential expenditure, so it may be that although a student doesn't necessarily have an issue with their income and expenditure, but they've incurred a cost for, say, a broken cooker or a broken car that they need to get to placement. The university may be able to help with regards to repair costs. Just on to benefits. So generally, full-time students on the course of advanced education, so those that are above level 3, such as an MVQ, level 4 foundation degree, bachelor's degree or postgraduate study, are ineligible to claim those benefits. There are exceptions which allow students to claim them, such as those that are single parents, those that are in receipt of personal dependence payment, disability living allowance, and have limited capability for work following the work capability assessment, and those that are deaf and qualify for disabled students' allowances. Students that are claiming working tax credits and child tax credits won't have their claims stopped because they're a student, so they can continue to claim those benefits even whilst they study full-time. There are different rules and regulations that govern universal credit, which is being rolled out nationally, so it's important just to note that while they might be eligible for benefits via the old system, legacy benefits, they may not be under the universal credit regulations. I've just included some links here, so this is further information. As I said, I'm not an expert on NHS courses, but I have included links to the Business Services Authority website, where you can find more information, and also the relevant websites for the different awards agency, so Student Finance England, Wales, Scotland and Northern Ireland. So that's everything. I hope I've given you a brief overview of student funding and repayments, and I'm happy to answer any questions that you might have, but thank you very much.